Welcome to our year-end planning series. I am Janet Myers from Patrick & Rain CPAs, and today we're going to talk about self-employed health insurance deductions and W-2 reporting rules for S Corporation owners. Who this applies to? This applies to sole proprietors, owners in partnerships, and S Corporation shareholders that received wages from the company and have at least a 2% shareholder interest in the S Corp. Why does this matter? Because these rules affect how much tax you pay, whether your deduction is allowed, and whether your W-2s are compliant, which is especially important if you use payroll services like ADP. Mistakes in this area are common but avoidable. Today's short overview will outline what you need to know and where to find authoritative guidance. Today, we're talking about a few important considerations for business owners. First, self-employed individuals face some unique challenges, one of the biggest being that they're responsible for purchasing their own health insurance. Partnerships face the unique challenge of either the partnership paying the insurance premiums or reimbursing the partners. Next, let's look at the importance of tax compliance. Accurate W-2 reporting of wages and deductions is essential. It helps prevent penalties and ensures business owners can optimize their tax savings. Finally, there's the financial impact and overall stability to think about. Paying your health insurance premiums and employment taxes regularly throughout the year can make monthly budgeting much easier and less stressful. The self-employed health insurance deduction allows qualifying individuals who deduct 100% of health insurance premiums for themselves, their spouse, dependents, and children under age 27. If you're self-employed, you may qualify for this deduction provided you made a net profit for the year. The exception is you can't be eligible for insurance coverage through a spouse or another employer. The types of premiums you can deduct are pretty broad. They include medical, dental, vision, long-term care, and even coverage for your kids under 27. The amount you can deduct isn't unlimited though. It's capped at your net self-employment income, and you'll need to subtract any premium tax credit received. And of course, keep good records. You'll need solid documentation and proof of payment in case the IRS ever asks, or for when you're preparing your taxes. If a shareholder owns more than 2% of an S Corp and performs services for the business, the IRS treats them as an employee for payroll and tax purposes. When the S Corp pays for the owner's health insurance, those premiums have to be included in that shareholder's W-2 wages. This keeps them in compliance with IRS requirements. Because of that, the W-2 has to be filled out accurately. With the insurance being reported in specific boxes, getting this wrong can lead to IRS penalties or even trigger an audit. To keep everything running smoothly, employers should work closely with their payroll provider. That way, employee benefits and the related tax rules are handled correctly. Form 7206 is basically the tool you use to figure out how much of your self-employed health insurance you're allowed to deduct. To fill it out, you'll need a few key pieces of information: the total premiums you paid, your net profit from self-employment, and any adjustments related to the premium tax credit. Getting this form right matters. Completing it accurately helps you avoid unnecessary IRS scrutiny, so it's important to keep accurate records of your premiums and your insurance coverage. Just like other benefits, 401k contributions have to be reported on the W-2. These contributions are still subject to Medicare and Social Security taxes, regardless of whether it's a traditional or a Roth plan. For a Roth 401k, federal withholding applies, since this is a post-tax contribution. But for a traditional 401k, there is no federal withholding for the contribution itself, since it is a pre-tax. Again, both are subject to Social Security and Medicare taxes. All 401k contributions get reported in Box 12 of the W-2. Here is a sample of a W-2. Correct W-2 reporting. Box 1 reports wages and insurance premiums. Boxes 3 and 5 report wages but not premiums, since insurance premiums are not subject to Social Security or Medicare tax. Box 12, Code D, reports employee 401k contributions. Box 14 reports self-employed and insurance premiums of shareholders owning more than 2% of the company. It's important to adjust your deduction for any premium tax credits you received. If you skip this step, you could end up losing out on some of the tax benefits that self-employed individuals are entitled to. The policy must be paid or reimbursed by the business to qualify. Make sure you hang on to your premium statements and proof of payment. Good documentation is key. Without it, deductions can get denied if you ever face an audit. Timing can help too. For example, paying your December premium early can give you some flexibility in deciding which tax year to claim the deduction in. Only premiums actually paid during the tax year are deductible. Maintaining documentation such as invoices, payroll reports, reimbursement records, and corporate minutes are essential to proving compliance with IRS requirements should your company be audited. The IRS website is a great place to start. It has detailed guidance on tax forms and reporting requirements, which is really important if you want to stay compliant. Tools like ADP, Gusto, and other payroll services can make life a lot easier. They help streamline payroll, prep W-2s, and handle things like health insurance and 401k reporting. And of course, talking with a tax professional can make a big difference. They can give you advice that's customized to your business and your financial goals. Overall, keeping up with the rules and getting professional help when you need it goes a long way toward making your tax planning and reporting stay on track. If you need help with your year-end reporting, reach out to us at Patrick & Range CPAs. We are here to help you close the year with confidence.